today's webinar on relative strength comparison, which will help us for sectoral allocation using technical analysis. Firstly, thanks a lot for joining in, and secondly, this is something that I had been working on for quite some time, the concept of relative strength comparison. Now, I would start off by making a clear distinction that this is not RSI. This is not a relative strength index, the very famous indicator, momentum indicator developed by Wallace Wilder in 1978. This is not RSI. This is a different concept which is called relative strength comparison. Now, there are a couple of assumptions that I have to make before I go ahead with today's webinar. Is the concept of relative strength comparison, and we will use this tool. This is essentially for us a tool, and this tool will be used for us to figure out which are the sectors or which are the stocks that are doing relatively better in the market. So I'll walk you through the tool, I'll walk you through the concept, the philosophy, and we'll also move forward and see how we can utilize this tool to do sectoral allocation. Now, all of these things is what I have planned for you for the day, for the webinar, but I am making an assumption that you would know a bit of technical analysis, right? This concept of relative strength comparison and sectoral allocation is a part of the program that we take, the Art and Science of Trading. Those who are my erstwhile students, this will be a refresher for them. Those who are new to it, this is one of the part of various strategies that we take in that course, which goes on for a month's time, right? So, hi Rupak, so you can put in your questions and doubts in the chat window, I'll answer them. So let's go ahead and start to understand how we can utilize relative strength comparison to implement sectoral allocation looking into charts. Right now, relative strength comparison, or this study of relative strength comparison, was something that intrigued me around 2010, close to 2010, and I did certain amount of reading. In those times, there were some white papers that I had, and I can jot them down here. Some of the readings that I did in that year. So these are the few white papers that you can go through. There are a few which have come up, and they all had their own findings about the concept of relative strength. Now, what is relative strength and what are these white papers signaling us or telling us? Let me try and put it in a very simple language. If you want to figure out, if you want to understand how a sector or a stock is behaving, or how will it likely to behave in the next time period, what we should ideally do is try to take a ratio. We would ideally take to consider a ratio which will have a numerator. Obviously, then it will also need a denominator, right? And this ratio will give us some kind of an understanding of how well the sector or the stock is doing. Now, what we do in relative strength comparison is, in the denominator, we take the base, right? So the base needs to be some kind of a benchmark index. And the benchmark index, in our case, the best benchmark index is a Nifty, or you can take the proxy, which is, the Sensex. That is, if you want to compare with the quality of the market. Now, we will extend this concept a little further. Let's take an example. Let's say you want to answer a simple question. I like to answer, let's say, Tata Steel. And you ask yourself, is Tata Steel a relatively strong stock or a relatively weak stock at the current market juncture? How is it doing? To understand how is it doing, all that we need to know is that we can do is we take Tata Steel on top of Nifty. Okay, and when I say Tata Steel on top of Nifty, you can take the closing price, or a better way would be that you take the percentage change. You consider the percentage change of Tata Steel every day. So Tata Steel closed 0.67% positive and Nifty was, let's say, 1% positive. So every day what you do is you take a ratio, and this ratio is essentially will give you a diagram which will go up or down. You can join these ratio numbers and it will go up and down. This concept is this kind of ratio we find out to realize, to understand the relative strength of the stock. Now, what is relative strength? Now we've kind of in a very basic understanding of how to calculate it. But if you want to know or understand what is relative strength, so let's say if I say that Tata Steel, okay, has over the last, let's say 1 year, let's say over the last 52 weeks, okay, have gone up 10%, and in that same time period our benchmark Nifty has gone up 12%. So will this be an outperforming stock or an underperforming stock? What say? Will this be an outperforming or an underperforming stock? You can put in an O or a U. Yes. So essentially what Tata Steel has done in the last 1 year, it has gone up 10%, all right, but it has gone up less than the Nifty, right? So this is a sign of underperformance. Now let's say the same stock, in this case over the last 52 weeks, has gone down 10%. And in that same period, our benchmark Nifty has gone down 12%. And when this happens, is this a sign of underperformance or is this a sign of outperformance? Correct. So this is essentially a sign of clear outperformance, right? So what happens here, what are we looking for over here are stocks that are outperforming the market. You're interested, you'll be more keen to know which are the stocks which are outperforming the market, be it a rising market or be it a falling market. We would like to know where is the strength lying, where does the strength lie, and we would like to stay away from the weakness. So the first assumption or the first philosophical base of relative strength comparison is they are looking to buy strength, right? They are looking to buy strength and we are looking to sell weakness. We are looking to sell weakness. Means this is not a buy on a dip strategy. This relative strength comparison strategy is not a buy on a dip. We don't buy under relative strength comparison. We don't buy a falling market. We in fact short or sell a falling market. And we buy or go long on a rising market. Right? This is an assumption, this is a philosophical assumption of relative strength index. Is the stock or the sector which shows strength will continue to show strength. The stock or a sector that shows weakness will continue to stay weak. So buy strength and sell weakness. The other way to put this is you buy high and you sell higher. So you are willing to buy at a higher price, making an assumption or a prediction or an anticipation that will go much higher and can sell. And in this case, I'm going to sell low so that I can book at a much lower price. So the concept of RSC, the concept of relative strength index, this concept is essentially trend following in nature. Now, trend following is one of the three various types of strategies that we discuss in our course. And trend following is one that follows the trend, that buys strength, sells weakness, that buys breakout after confirmation. The other two strategies, which are not part of the relative strength comparison that we cover in our course, is that of swing strategies, which is ideal for future traders because they are short-term in nature trades. And then we have the contra or the contrarian. What we are discussing here is trend following, purely trend following in nature, right? So let's go back to our example where we want to know a particular stock or a sector, how is it doing vis-a-vis something. Now when it comes to something, that is to decide your base, what will be the base? The best thing to decide your base is first the flagship, your benchmark index in the market. In this case, let's say we use Nifty. Let's say you want to find out how well, let's say Tata Steel is doing. So when you take the ratio and you plot it, I will show you now how does it look. You can answer the question how Tata Steel is behaving or performing vis-a-vis Nifty. The other thing that you can do is you can take Tata Steel on a base of the metal index. In that case, you're gonna do a simple comparison of how the stock is doing vis-a-vis its peers, right? So let's take a look. Let's go to the charts and let me show you how it looks. So this is the Iris Plus Spider software that I generally use for tracking real-time markets. This concept of relative strength comparison can be implemented in any softwares. Once you understand the concept, be it on Metastock or AmiBroker or most of the softwares that we have, you'll be able to implement it. So let's see. This is the daily chart of Nifty. So I'm on the daily chart of NSE Nifty, right? I will keep a note of the code of Nifty. What is the code? The code is N59901. 59901 is the code of Nifty. Now, let me open the chart of Tata Steel. So I can clearly see that Tata Steel recently had an amazing run from close to 210, 216 all the way to 360, right? But before this move happened, the stock was in a range where there was equal swings on the upside as well as the downside. And before that range bound market, if I look back further, I'm very clearly can see that the stock had been in a very sharp downtrend, right? So I am looking into a stock which broke above that 240 mark, way till 360. But before that, this big sharp move, the stock is in a range, and before the range, the stock is in a strong downtrend. So how do I pick this move? How do I know that I have a winner in my hand? So let's start and compare Tata Steel's price movement with the index. Step 1. You plot a relative strength comparison. You plot the relative strength comparison indicator, and this one indicator you'll find in most of the softwares, all of them. And you need to tell the software that, hey, I'm going to compare, I want to plot relative strength. So I need something, I need the denominator, right? So what should be the denominator? So we want to compare it with Nifty. So if you remember, the code of Nifty was N59901. And let's say I want to compare since 1990, and I hit add. If you can see this light green line that I have here, it's just like a line chart going up and down, right? And it has a base of close to 100 over here. And this is a relative strength comparison line. This is not where it's over. What the line says is when it's above the 100 mark, that is over here, it is an outperforming stock. It is outperforming the Nifty. If the stock is going up and the Nifty is also going up, then the stock is going up much more than Nifty. That's why it's gone above the 100 mark. The opposite thing was when it's below the 100 mark. So this is where it is underperforming. Right? Now, how do we use this? Now, this is not a very good way to use the RSC indicator, because the RSC indicator has one big drawback when it comes to its computation. When it comes to its computation, there are various ways, which I'll show you in this slide, are various ways in which the relative strength can be computed. It can be a percentage change method. It can be a little mathematical alpha method or a trend slope method, and finally the final one, which is a Levi method. So these are all various ways in which the relative strength can be calculated, and we actually do not know. We can find out that what way the software coders are using to calculate it, right? So what we should do is not follow this simple line and just use it whenever it's going up means outperformance and coming down means underperformance. What we would like to do is we would like to understand that in which phase of the market or in which phase of the strength the stock is right now. How do we do that? Okay. Now, before I show you step 2, this is what I want to just share with you once. Let's say you have a chart which had been coming down. Let's say you had a chart which had been coming down and then probably went into a range like Tata Steel. And then let's say I'm drawing Tata Steel, and Tata Steel gave a big move up, right? Now, before I tell you, so there was a breakout over here, then there was a big breakout over here. So this area was a very good buy. However, this area would have not given you a very good buy trade. I can have parallelly another chart, which is probably in a range, is about to break out, and let's say you broke out and then it just came down further. So on this 2 examples I have where I'm showing, the one on the left is very similar to Tata Steel chart. I'm showing that in one case, the breakout, in one chart, the breakout worked extremely good and it gave me returns. On the other case, similar looking chart, similar looking breakout, but it did not work at all and I got stopped out or I got whipsawed. Now, if you are a technical trader, you will have such breakouts every day. You will see movements from the price breaking up, breaking down every day. But then end of the day, you have to make a decision. You have to filter your breakouts and go with the ones where you have maximum confidence. How will you filter out? How are you going to filter out that I'm going to go with this trade and I'm going to not go with this one? So the topic of relative strength comparison that we have started today talks about how it will help you to decide which sector or which stocks to focus and which stocks to not focus. Very simple. You would have guessed it by now that if I have a good score, if this chart on my left, it's a relatively strong, if it's an outperformer, then I will take this breakout. If it's an underperformer, then I will not take this breakout. Now, how do we do this? This will take us to step number 2. Now, this example I've shown is for a buy trade. Okay. Now, the same thing is for a short trade. Remember, we are buying strength and we are selling weakness. So when it's a topic about going long, we would like to go with the outperformers. And when it's a concept of going short, we will be going with the underperformers. This takes me to step number 2. I have the RSC chart, the RSC tool. It goes up and down like the market. But then RSC in itself is quite volatile. You see that it goes up, comes down, it does all its bits. So to any chart or any data set which is very volatile, which is gyrating a lot, to smoothen it out, what do? Technical traders essentially use a very simple tool to smoothen out the data. And that smoothing out data is a moving average. So I come to my study box. I need to plot a moving average. I need an average of the RSC. So I come to average. And in this case, I would take something like a simple 12 period moving average. I'll give it a different color so that it distinguishes from the relative strength comparison indicator that I've plotted. I'll plot on the RSC indicator, that's the green line. And my input would be that I am calculating the relative strength of the RSC. I'm not calculating, sorry. I'm going to calculate average, moving average of RSC, not moving average of price. So amongst this, I choose, I want to drop a simple 12-day moving average. So I want to choose RSC and I add it. Quickly, is my audio clear? Someone's got a little audio problem. Sandeep. All right, fine. Thank you, Sandeep. Thanks for joining in, guys. Okay, before I move on, is this all right? Am I going too fast, too slow? I hope all of you are with me. Any doubts? Feel free to drop in a question in the chat window. I'll take it up. Right? Don't worry. I'm first. My objective of this webinar is to help you with a nice filter, which will help you to take the breakouts. Will help you to take the breakouts and leave the ones which are a false breakout kind of situation. First, the objective is to show you through a chart. Then I'm going to redo the whole thing so that you understand it really well. I also understand that every one of you do not use the same software, but try to understand the concept well. I have implemented the same thing in metastock, in other softwares also. So if you understand the concept, implementing it will not be an issue at all, right? So going back to what we were doing, we have the daily chart of Tata Steel. Fair enough. We have plotted a relative strength comparison and we are comparing it with Nifty. We are comparing it with the benchmark Nifty. Then what we have done is we have plotted a simple 12-period moving average, and this moving average is calculated not on price, open, high, low, close or anything. It is calculated on the RSC. It is calculated on the relative strength comparison. So what do we have here at the bottom? You can see clearly at the bottom that I have a green line, which is the RSC, and then I have a red line, which is a much smoother line, and this red line is the 12-period average. This is a 12-period average of the RSC. Now forget this dotted line and all. This is where I come to step number 3, and this is the most important part of it, what we want to understand. What we want to understand is this red line and its slope. When it's sloping up, when the red line is sloping up, it says that the slope is positive, so it is an outperforming stock vis-a-vis the index. If it's sloping down, the moment it starts to slope down, it is kind of moved into an underperforming zone. Now, having said this, visually, it's very difficult to understand whether exactly this is sloping up or down, right? Like if you focus at this part, if you come at this part, this zone, it's plateaued out, it's moved up a bit, then it's come down. So I'll come to that. Anantaram is asking whether any reason to choose 12. I will get to your answer, Anantaram, after a little while. There is a reason why I've chosen 12 or 13 is the ones that I choose. Once I make you understand this, I'll tell you exactly why I've chosen 12 or 13. So how do I visually figure out that exactly the slope is positive or negative, right? Visually, I do not want to do this. Visually, I would not like to do this. So what I would like to do is, I would like to plot a rate of change. Now, this is where it gets a little interesting. So I go back to my indicator box. I go back to my toolbox. And I go to an indicator called rate of change. I want to know the rate of change. Okay, let's talk in very simple layman's language. You come here at the last candlestick. At the last candlestick, if you see on the right hand side, bottom right hand side corner in red, the number is 122.65, 122.65. This is the average. The 122.65 average is the 12-period average of the RSC, correct? What is that value in the previous one? Is 122.90. So this is fallen. 122.65 is lesser than 122.90. And the previous one. So we would like to know exactly one period change. How much has this average changed in one period? So the moment we have the next candlestick on Monday, I will have an open high low close of Tata Steel. I will have an RSC of Tata Steel, and then I will have an average of the RSC. So that average, is it going to be more than 122.65? Then it's going to be positive. Is it less than 122.65? Then it will be negative. So how do I figure this information without eyeballing it? How do I quickly figure out this information without actually zooming in and actually reading the data and subtracting? So simply do this. I go to rate of change and I go to parameter and I say 1 period. Just give me a 1 period change. What is this period's data? Previous period's data. Do a rate of change and tell me. So let's say I give it a different color for visual clarity so that I can give, let's say, blue. Subgraph little lower and input. In this case, am I going to plot on the close? Do I want to know the rate of change of closing prices? Not really. So what are we interested in? We are interested in knowing the rate of change of the average, the red line. This is the simple average 12 period. So I add it. So it gives me 2 lines. The second line is not necessary. I just want only 1 line. Now this is the most important line that is in focus, this blue line, right? The ones which we plotted, so the blue line is derived. This blue line is 1 period rate of change is derived from the red line, and the red line is a moving average which is derived from the relative strength comparison, the green line. And the green line, the relative strength comparison, is derived by subtracting percentage changes of Tata Steels and Nifty. I hope you're with me. Now what I'm going to do is I'm going to simply hide the unnecessary tools. Now this is the tool that I'm interested in. What does this tell me? So you will see that because this is a rate of change indicator, it will go positive and negative. So I have the 0 line. You see the horizontal dotted line? The horizontal dotted line is the 0 line. And I have my blue line either going up or down this horizontal line. Now here comes the crux of the entire story. The crux of the entire story is very simple to the point, is that when the blue line is above the 0 line, so from this point till this point, right? From this point, that's the 15th of Feb 2016 till 5th of May 2016, the value of this blue line was positive. It does not matter whether this line is rising or falling. Please do not get into that trap. Do not get into the trap whether this line is coming down. Does this mean the market is coming down? No. All that we are interested is in the sign of this value. Is it positive or negative? Simple. So if it's positive, that you can see in this zone, it's positive. So from this day till this day, Tata Steel was a relatively outperformer, an outperforming stock. So whenever you get a breakout or a buy signal from trend following systems, you should take it. On the other hand, now that Tata Steel has gone into a zone of underperformance, you're seeing that the Tata Steel stock is actually negative and it's gone excuse me, underperforming. If you get a breakdown, a weakness from the stock, then probably it's a good stock where you can look to initiate a short sale because the stock is in a weak trend, right? So now let's look into some examples. Let's look into what has happened in the market over the last 52 weeks. So I had quickly got a small little data mined from the software where I wanted to know which are the sectors which has and what kind of percentage returns they have given in the last 52 weeks. So I clearly see that it's Nifty Media that is standing out, and most of them are actually not doing that great. I see down here that after media I have the mid caps and the FMCG, energy, auto, etc. I have Nifty 50 which is lagging here. Mid caps are doing relatively better compared to the index. PSU banks are getting clobbered. Metals are trying to do better, but it's media that's standing out. On the right hand side, if you see here, this entire long table that I have is essentially Nifty 50 stocks. And I see ZEAL, that is Z Entertainment, is standing out with a 37% gain. Can we quickly check the chart of Zeal? When I come to my software with my indicators plotted, and let's say I open up Z. When I open up Z, I see that I get a nice breakout. Okay, Prakash is saying some audio issues. Is that the same case with the rest of the guys? Prakash has some issues. All right, can you quickly give me an audio and video clarity? Sounds okay, thank you. A couple of them more so that I can answer to Prakash. All right, okay, no problem. Okay, all right. So I'll just thanks guys. Okay, I'll just quickly put in a word to Prakash so that he checks at his end. Yes, Prakash, recording will be provided. So this is how exactly we conduct our classes every Saturday, Sunday. You know, if you are one of our erstwhile students, you'll know this very well. But that's exactly what we take our online classes of the art and science of trading, right? All these webinars and these classes that I take are recorded, right? They'll be shared with you on the YouTube channel so that you don't get in, you know, whenever you want to listen to it, you can hear them. Okay, Anirban is asking, is the software proprietary or not? No, this is not a proprietary software, Anirban. This is an Iris software, Spider software. Let me try and show you. There are various softwares in the market. I've been using this software for a long time. It's fairly user-friendly. But having said that, there are many other softwares. So you can check if you are an active technical trader, you would need a professional software. So this is the one that I'm using. Doesn't mean that you have to use the same thing. This is the one that I'm using. It's not proprietary at all. I've been using this for almost 11 years, so I'm doing that. There are other softwares like reliable softwares, the Falcon 7. I can show you that as well. That's also a pretty decent software. Very similar to the Iris Plus. So if you're already into a softwares, then you would know all of these things. If you're new to technical analysis, then you know I'm just sharing these informations, which is the Spider software or the reliable Falcon 7 software is pretty good. The metastock, obviously you would know. Ace, Sandeep is saying that I've taken subscription of Spider Ace for 2 months back. That's good. Ace is a very good end of day software. Yes, Sandeep, you can do the stuff, the analysis, the scanning that I'm showing you. You can use that in Ace as well. No issues at all. All right, Abhinav is asking, is there any good softwares that are free like NEC Tame? So Abhinav, let me tell you, NEC Tame is not the best of free softwares. There are many better free softwares. All these sessions are actually, we cover them periodically in our sessions. Let me give you a sneak preview of what goes into the art and science of trading. So we walk through tradingview.com. We also walk through aggressively netdania.com. We take half a session on netdania.com. So you can check tradingview.com. Tradingview.com has a pretty good charting platform. If I'm not mistaken, TradingView's charting platform is sponsored by the FXCM broker. So I'll just quickly show you. It's taking a little time to load. Yes, Shivakumar is saying investing.com is also good. Shivakumar, essentially what happens is investing.com. I used to previously prefer investing.com also, but then I realized that investing.com's platform is exactly the same as TradingView. In fact, they're using the same software, same API. So this is tradingview.com, fairly good. So let's say I come here and I type ICICI. And anything in their database which has the word ICICI actually crops up right here. On the right hand side, you can see stock NSE, right? So, and everything that can come up. So I don't even know what kind of, so over here I see ICICI, NYSE. So this is the ADR that gets traded there. So this is the chart of that ADR. So these are the prudential mutual funds. So let's see what will this take me to. ICICI Bank Limited, stock in National Stock Exchange, hit it. And it opens up. So I have the chart of ICICI. It gives me, earlier it did not used to give us intraday charts, but it used to give us only daily, weekly, monthly. But now we have hourly charts and all that, which is a very good addition. This is a free software. No, Shivakumar, during the day it should change. I'm not too sure because I don't use TradingView in real time. I use the Spider software. The other one that gives real time, I know for sure, is netdania.com. Now, netdania.com is one of the best free softwares. The NetStation is the one that is I prefer. I refer students who want to use a free platform. That's NetStation over here. Showing you NetStation will take me a one webinar or one, half of the session. What we do in NetStation is when we do the art and science of trading, I think half of day 2 or day 3 goes into NetDania because it's so exhaustive. It's really impressive to use a free platform like this. You can also check their app. Their app on iOS, their app on Android is fairly good. So you can use that. So we have deviated a bit from the concept to the softwares, but yes, answering your questions, there are many free softwares. I'll just finish off with the last one. The last one is on Economic Times. Let me figure out Economic Times technical charts. I don't remember exactly the link, but yeah, this is the one that should get you. Yes, Prakash, recordings will be provided. It will be there on the YouTube channel. Yeah, so this is another one. This is the Desi version. We have the Economic Times website within which they have started showing live charts. So you have various types of charts and you can compare them. You come here, you type, let's say, Axis Bank crops up. You can plot Axis Bank. So this is also a good one that you can use. Prakash is continuously having some issue. Let me one more time put it down to him. So guys, what happens is when we do these online classes, I'll request everyone to keep your bandwidth as much free as possible, especially if you're on Wi-Fi. Disconnect your phone or tab so that during the webinars you don't face any internet connectivity issue. We rarely do that, but Prakash seems to be facing it. All right, so done. So these are the free softwares. Again, we will walk you through. I'm sure few of you are going to join me from next Saturday online classes. And when we start our classes, I'll walk you through these platforms exhaustively. Sandeep, I just came back from Mumbai last night. I'm going back again very soon. Mumbai has been like my second home. I've been stayed there for 10 years. And it's very, what do I say? It's really very strange that you tell me this, because just 2 days back I was talking to someone and I was planning to conduct an art and science of trading, one batch in a year in Bombay, right? So now that you've asked me, I think that gives me a lot of more motivation to conduct it as soon as possible. But that doesn't stop you, Sandeep. There are many guys who have joined from Bombay online, so that's not an issue at all. So let's go ahead with our concept. We have deviated a bit from our concept to charts. Now going back to the concept, so this is where we were talking about sectoral allocation. We were talking about various other stocks. So how do we know which stocks to pick up and which stocks to not? So all that we want to know is create buckets, right? All that we want to know is we want to create buckets. We want to have a bucket of outperforming stocks and we want to have a bucket of underperforming stocks. So let's say we call this outperformers and let's say we call them underperformers. Let's start with a top-down approach like you do for your fundamentals. Let's start with a top-down approach. Let's go to our software. If I open the chart of Nifty, this is the daily chart of Nifty, you can clearly see that the line has gone horizontal. Screen is not getting updating for Mr. Jace. Yes, the ROC indicator is there on the tools, right? So if you have the chart of Nifty, good now, thank you, Jace. So if you have the chart of Nifty, you see that my blue line has gone horizontal. Obviously, it will go horizontal because I have calculated the relative strength and I've compared it with Nifty, right? That's why obviously it has gone horizontal. Now let me open up the sectors. This is my list of all the NSE sectors, right? This is a list of all the sectors. Let's say I open Bank Nifty. Now Bank Nifty, as you can see, is in the positive zone, 0.06. I'll repeat once again, I am not interested, we should not be interested to know whether this line is sloping up or down. All that we are interested in, what is the sign of this value? Is it positive or negative? What does it say? Positive. Done. So if it's positive, then my Bank Nifty comes to my list of outperformers. Right? Let's go back. Let's find out energy. I find energy, and energy I can clearly see it's coming down. So the sign is negative. So it's an underperforming sector. So I write energy. I'm writing it, I'm doing it a little primitive, but all these things can be automated. So let's say Nifty Auto. What is the auto doing? It's been in a short-term downtrend. It's below the zero. What is the sign? Negative. So auto. Let me do two more. Let's say I go to FMCG. FMCG has just inched up and it's trying to show some strength. Now, please, this is a very interesting part of the chart. The FMCG, the Nifty FMCG sector is within a range. There's no doubt about it. Before the range, there has been an uptrend, short-term breakout, correct? And now the point is, after this range, is it going to break out on the upside or is it going to break down? We don't know. But within this range, as it's been within this range for, let's say, a month and a half, it's actually kind of started to outperform the Nifty. The Nifty is coming down, but this is holding better. So this is an outperformer. So I come here and I say FMCG. So my work is, if tomorrow I get a breakout in FMCG, I should take it because it's in my positive quadrant. If that breakout had come, but my value is negative, my negative quadrant, then I will not take that trade. This is the objective. Let's do two more. Let's say IT, positive. And one more. Let's say we do metals, negative. So I have created, so like this you can do for the rest of the sectors. And these things can be done very easily using the software. You need not do it the traditional way, written down in a piece of paper that I'm doing it so that you understand it better. So I have three sectors: Bank Nifty, or the banks, the 12 stocks that makes up the Bank Nifty. I have the FMCG sector and the IT sectors. They are outperformers. The others are underperformers, which are the energy, auto, and metal, right? Now let's say, now we drill down to one sector at a time. Let's say we now come down to the Nifty, the Bank Nifty stocks. We come down to the Bank Nifty stocks. We know we have 12 stocks under Bank Nifty. Let's open one more bucket. Now we are talking about Bank Nifty stocks. And under Bank Nifty stocks, I can again have two buckets. In this bucket, I'm going to compare the Bank Nifty stocks with Nifty. And in this bucket, I'm going to compare it with Bank Nifty. Let me show you how. Let's come to this chart, this template. I quickly open the Bank Nifty stocks, and I want to find out which are the stocks. Okay, Bank Nifty, was it an outperformer or an underperformer? It was an outperformer, right? So I am looking to buy from an outperforming sector. So I'm more keen to go long rather than go short. I'm not going to go short. Why am I not going to go short in Bank Nifty stocks? Because it's an outperforming sector. So I'm only looking to go long. So within Bank Nifty, now what I will do is I will get down to each and every stock, Axis Bank, and find out whether it's positive or negative. What is it? Positive. So my Axis Bank, with Nifty we are doing it. So Axis Bank of Baroda, you see negative. So I am not going to entertain any kind of breakout in Bob. No entertainment of any movement. If Bank of Baroda moves up 2-3%, spikes up, I am not interested. Why? Because it's in my second negative quadrant. Bank of India, not interested. Can Bank, not interested. Fed Bank, interested because it's positive. HDFC, positive. ICICI Bank, positive. SBI, negative. IndusInd, positive. Kotak, negative. PNB, negative. Yes, positive. All right, beautifully done. And very nice balance of 6 stocks. Okay. One small mistake I've done here. Beg your pardon. So 6 stocks which are outperforming the Nifty and underperforming the Nifty. Yeah. Yes. This is better. There was an error there. So what have I done is I've taken all the 12 stocks that make up Bank Nifty. All right. And I have taken the base as Nifty. And I find out which are the stocks which are outperforming and which are the stocks which are underperforming. Clearly, I have these 6 stocks which are outperforming. I am not interested in these 6 stocks at all. I will not be looking into these 6 stocks to buy from a trend following point of view. Very important to understand. I will not buy their breakouts because their breakouts are likely to be weak. Why? Because the sector is in an outperforming zone. So if the breakouts come on the downside because they're weak, I'm not entertaining them. The sector is positive. The sector is in positive quadrant. So I am only be looking to go long. If I'm only looking to go long, then I would look to go long in those stocks which are showing strength compared to Nifty. And these are the 6 stocks. Now this takes us to the next level. Is within these 6 stocks which are doing better than Nifty, I would like to know which are the stocks which are doing better than Bank Nifty. Okay, I'll take the questions. I'll just go through the Bank Nifty concept and I'll take all the questions. So now I have come down to 6 stocks. These 6 stocks are from an outperforming sector. Within the sector, these 6 stocks are outperforming the Nifty. Done. The last step is how do I compare their strength with the Bank Nifty? So we go back to our chart. I open Bank Nifty just to memorize the code, and in this case the code is N59906. Or I can do one thing. I can open 2 charts. Let me open 2 parallel charts, right? Okay, now what I'll do is I'll quickly make some differentiation between these 2 charts, one on the left and one on the right. On the right, let's say I open Axis Bank. Now on the left I have Axis Bank daily chart. On the right I have Axis Bank daily chart. On the left I have this relative strength comparison with the base, the denominator as Nifty. On the right I would like to have that with Bank Nifty. So I come to I'll just quickly check the code of Bank Nifty is 59906. So I go to relative strength comparison. This time I'm going to put 59906 and not 59901, which was Nifty. So I'm adding it. Where did it go? Okay, one sec. Software seems to have a small issue. Okay, fine. He didn't like what we are doing. Okay, fine. 1 minute. I'll request you to stay on the mute mode. There's a little background. All right. So let us give it a try again. Let's go to our software. Okay. Okay, let's terminate it. Okay, let's start again. I don't think so, Shubhajit, that's the case. But anyways, all right. So I open two charts. I create a template, right? On my left hand side, I would like to do a comparison with Nifty. So for the aesthetic sense, I'll change the color so that I can differentiate between them. All right. Volumes are not necessary in this kind of analysis, so I am getting out of volumes. So left hand side Nifty, right hand side Nifty, both are daily charts, fairly okay. Let me open a stock, let's say Axis Bank. All right. On my left, I want to do an analysis, a comparative analysis of Axis Bank with Nifty. So I go to relative strength comparison. N59901 is Nifty. I add. On my right hand side, I want to compare Axis Bank with Bank Nifty. This time with Bank Nifty and not with Nifty. So study relative strength comparison. N59906 was the code of Bank Nifty. Add. There is some issue with the software very clearly. I have done this so many times. I don't know why is it creating such an issue, especially when I'm taking this webinar. Okay. So let me try without relative strength comparison. Let's say I do it on the weekly charts this time. Relative strength comparison. Let's say N59906. Let's say I want to compare from 2000. Yeah. Yes, I think it was 1990. That's why it was creating a problem. Let's say, okay, we are good to go. Add. Let me get the screen ready. I'll walk you through what I'm doing right now. Okay, N59901 is Nifty. All right. So what do we have here? We have the chart of Axis Bank. This time we have the weekly charts. I've got it on the weekly charts. Left hand side, Axis Bank weekly chart compared with Nifty, 59901. Right hand chart, Axis Bank weekly compared with 59906. That's Bank Nifty. Now what are you going to do? We're going to plot an average. So S12. Now this is where I will answer a question which was raised some time back. Why did I choose 12? Because this study, this relative strength comparison study that we are doing, the relative strength comparison study that we are doing works pretty good if we have a medium term time frame, right? And for that we use the weekly charts. We might as well do it on daily. But in the weekly time frame, the relative strength comparison that we're doing works better. And when I'm taking an average, I've taken a 1 quarter's average, 1 quarter, so right close to 12 weeks. That's why I had chosen 12. This is the answer to the question raised before. Why did I choose 12 or 13? Because I'm taking a 1 quarter's time frame. That's why I've chosen 12. Why did I choose 12? Because it works better on the weekly charts. Does it not work on the daily charts? Yes, it does work on the daily charts as well. Better on the weekly charts. Mandir, everything is recorded. Both are not Nifty, Shivakumar. One is Nifty, one is Bank Nifty. That is the base. Both of them are Axis Bank charts. Both of them are weekly charts. The RSC is in this case 59901, that is Nifty. The RSC in this case is 59906, which is Bank Nifty. Okay. Now the last leg, I go to relative rate of change and I add. I go to rate of change and I add here. So the rest of the things are not necessary, so I can remove them. And we have our screen ready, right? Now what do we have here? We are looking at Axis Bank from a weekly time frame. Anantaram, this is a long discussion. ROC, RSI are both momentum indicators, but they are very different in nature. In simple answer, RSI is a much better useful than ROC. The calculation, the formula of RSI is such that it works fairly well. I don't think that you're part of the AST successful trader group, but if you plan to, do feel, if you can make up time, do join us, because we spend almost an hour and a half on just one indicator, which is the relative strength index. All right, everything will be recorded. Mandir will be shared with you on the YouTube channel. Now this is what we want to do. So going back to our bucket. So we would like to know how's ICICI Bank and IndusInd Bank doing. So we come and open IndusInd Bank. Now you see what is IndusInd Bank doing. IndusInd Bank has, in the weekly charts, is both positive, both in the quadrant of positive, right? So what we do over here is we do a top-down approach, correct? First step that we do is we compare. We relate, we find a relative comparison. So we compare sector and how is the sector vis-a-vis the index. From this comparison, you get two buckets. One which are the outperformers, one which are the underperformers. Now the ones which are the outperforming sector, that becomes your buy list or your long list. This is the list from where you would like to go long. This is the list from where you would like to short. Done. All right. Now once you have the buy relatively strong sector, we are in sector right now. The same concept now goes to your stocks. Now what you will do is this buy list, you do a comparison of the stocks upon Nifty and those same stocks upon the sector. So the example that we took right now was that of Bank Nifty. So the first step that we will do, is we will scan all the NSE sectors upon the Nifty. This will give us some buy ideas and it will give us some weak sectors. From the ones which are relatively strong sectors, we got Bank Nifty. Now Bank Nifty was a relatively strong sector because it was positive. Within Bank Nifty, we look for those stocks. Now Bank Nifty is made up of 12 stocks. Now we do the same thing but twice. One with Nifty as the base and second as sector, that is the Bank Nifty as the base. All the 12 stocks upon Nifty, all the 12 stocks upon Bank Nifty. The same process. You will take those stocks in which both of them are positive. And when you get a breakout in these lists, you buy and go with the trade. That's the concept of relative strength comparison. Does it? Now the point is, I'll come back to this. Let's say keep 1. Now the point is, I was showing to you on the slide some time back the various studies, white papers that are being done, right? Now, most of them is of the conclusion that this concept of relative strength works very well if you are looking into a period of 6 to 12 months. Then using relative strength is a viable strategy of selecting stocks. So if you are a medium to long term kind of an investor trader who has 6 to 12 months time horizon, then this concept works good. Does it not work in the short term period? Yes, it does, but not as good as it does in a 6 to 12 month period, right? And then these are the ones that I've shown you. I'll quickly go to the part which I showed you some time back. One sec. Yes, this is the process. This is what I wanted to show you. I want to walk you through the process once more. Is you first calculate the relative strength comparison on the weekly time frame. Now, after you've done that, you calculate a 12 weekly simple moving average. Why 12, Anantaram? Because I want to look into a quarter's outperformance or underperformance. See, when I get some good trades, I'm looking to hold on to it for a year or more than a year. So I need to know the quarter's outperformance or underperformance. And the third step was, now I calculate a 1 bar ROC. And if the ROC is positive, it is in my long bucket. And if my ROC is negative, it is in my short bucket. This is filtering out. This is a beautiful way to filter out which are the breakouts that are you going to buy and which are the breakouts that you're not going to buy, right? This is the process that I've shown in the Spider software. The same thing can be done. The same thing can be done using Metastock or Reliable or any other software. Try to understand the concept well. So let's say we come here and we had seen that Nifty Media and Z are doing pretty good. So quickly, let's say we open up Z and let's say we go to the daily chart and relative strength comparison. Let's compare it with 59901, that is Nifty. Let's drop in an average. Let's drop in an average on the RSC. And the last step, the third step, is the rate of change. I have probably done this 3 or 4 times in front of you so that you get a hang of it. On the first time, it's very little tricky to get an understanding. So you see that ZEAL right now, what is it? This is the daily chart. Yeah, this is the daily chart. Now ZEAL on the daily chart, you see it's positive, no doubt about it. But when did it go positive? It went positive on this day. That is 8/4/16. Let's go to 8/4/16. Yeah, over here. Now, as you can see, what is ZEAL doing? ZEAL is within a range for a long time. There's no doubt about it. See, look into the multi-month range. It's in a range. Multiple times it has gone above the zero line also, right? But this time also it has gone above the zero line. What information does it tell you here? The information that gives me here is, if I have a breakout, if I have any kind of my trend following indicators like an MACD or a super trend or any kind of trend following indicators, if they give me a buy signal, then I have the support of relative strength index to buy. So if you get a buy signal, if you get a breakout, you know it's coming from a strong stock which is outperforming the market, and so you have a nice move. So you have a nice move. Now where do I stand in ZEAL right now? Is it in positive quadrant? Yes, it is. Now the same logic applies. Now the move has already taken shape. This is an ideal candidate for swing trading strategies. This kind of scenario is ideal for a swing long trade, What is a swing long trade, etc., is again a long story. It's part of the course, but someday I'll figure out some time to share a bit of swing trading strategies also with you. In this juncture where Z stands right now with strong relative strength comparison, short-term bounce back, short-term correction, it is ideally placed for a bounce back on the upside. So this is exactly how we will filter out the sectors, and this is exactly the way we will figure out the strong stocks within the strong and weak sectors. So that's the idea of how to use the relative strength comparison. Okay, any questions? RSI is same comparative RSI indicator in Zerodha Pi? No, Shailendra, that's not the case. RSI indicator is very much different from the RSC indicator. Do I need to check this while breakout? Shivakumar, that's exactly the idea when you are trading breakouts. If you are a breakout trader, you can be a trend line breakout trader, you can be a moving average crossover trader, you can be a super trend trader, you can be a MACD trader. If you're trading breakouts, means you're buying high, selling higher, do use RSC filters. It will help in trading less. It will help in getting better trades. Vishnu, RSI is relative strength index. Wallace Wilder, momentum indicator. RSC, relative strength comparison. Completely different. Okay, questions? Yes, this webinar is recorded. I'll share it with you on YouTube. It will be free, so not an issue. We'll do a little bit of post-production to make it a little crispier. So I think you should get it by Monday. Acha, Munesh has got a good question. He's asking that, does it work in intraday? Now this is where the caveat is. All the studies of relative strength comparison that I've read and I've done, experimented myself, works pretty good if you have a 6 month to 1 year time period. Not the best of strategies in terms of intraday. For intraday, we implement something else. We use a lot of different types of swing trading strategies that help us to pick up intraday trades. This is not for intraday trades, Manish. What is the 52-week percentage change? Arun, it's the 52 weeks. So let's say we come here. I'll show you. You come to the software. You come to, let's say, a report designer. And you say, I want to find out which are 52, let's say, week. So I want to find out which are the stocks, what are the percentage changes of stocks within, let's say, Nifty 100. And I run. So this gives me 52 weeks percentage. Bajaj Finance is 79% up. Hind Petro in 52 weeks is up 48%. Ashok Leyland in 52 weeks is up 43%. JSW is up 41%. So Arun, that is what the information is, that percentage gain or loss in the last 52 weeks. Rajshri, that's exactly, there's no best strategy, Rajshri, actually for intraday trading, if you honestly ask me, but there are various strategies that can be implemented. Do implement strategies that you understand, that you're comfortable with. Do not go by what others, try to teach you, but there's no best strategy. There will be best strategy just for you. So you have to figure out, you need to understand how many strategies you can implement and pick the ones that's best for you, right? Mandir is asking, so to make use of this, we need to no, Mandir, it's not that. I am not promoting any software, please, disclaimer. This is a software, this is a platform I've used to show you, make you understand the concept. If you've understood the concept, I guess so, you can do that, implement it in any softwares. I have personally done it in Metastock, I've done it in other softwares like Falcon also, so it shouldn't be a problem. Sandeep is asking, recordings will be shared with you, Sandeep, by Monday evening. It will be shared on YouTube channel. I request everyone to subscribe to the elonmarkets.com YouTube channel, because once the video is uploaded, you'll get a notification. So please provide me steps on how to get ROC indicator in tools, Shivakumar. If you are using any of these softwares, right? If you're using any of these softwares, when you go to the toolbox, when you go to the study selection box under Spider software, it's study selection. Under Metastock, it's the list of indicators. Go to that window which has the list of indicators. And under alphabetically, when you come to R, you will find relative strength comparison. Most of the softwares will have it. Most of the softwares will have it. Shailendra, how to use in Zerodha Pi? Zerodha Pi is a pretty good software. Zerodha is one of our broker partners as well. Pi has RSC or not, I need to check myself once. the need of, I've never had the need to check there because I use the other softwares, but I'll do check, take a look and get back to you on that. Right. So values to put for ROC indicator, you need not put any values for ROC indicator, Vishnu. You have to put the underlying. You need to put the code of the denominator. Right. Fasil, yes, RSI indicator is just one tool. Try and understand something, that there are various ways to filter the market. RSI that we discussed today is just one tool which will tell you right now, if I ask you, Fasil, which are these sectors which are outperforming the market and underperforming. How do you answer this? You answer by this. So you say, sir, banks, IT and FMCG are outperforming. Okay, fine. Now what? So, sir, bank, FMCG and IT are the sectors which are outperforming. So if the market goes up, they will likely to go up more. So I'll be more of a buyer in these sectors. All right, Fasil, what next? So within Bank Nifty, FMCG and IT, I will look for those stocks which are doing better than the Nifty and which are doing better than their peers. That sounds like a plan, Fasil. What next? So I'll do an RSC of the bank stocks with Nifty. I'll take the positive ones. I'll do the bank stocks with Bank Nifty and I will take the positive ones. And the ones which are common in both the list, that's my list to go buy. The vice versa is the list to go short. I hope I'm clear on this. Monesh, you can check fundamentals, not a problem at all. You can check, there's no issue. So Shubhajit is asking, can we compare Nifty with USD INR, because most probably opposite, and also India VIX. Shubhajit, you may do so, but then that's not exactly the kind of underlying relatives that you want to figure out, right? You would like to probably, you can do USD INR with the dollar index. You can do Euro INR with the dollar index. But you're comparing Nifty with USD INR, I don't know how good information it will give you. Thanks, Fasil. Great. In the little softwares walkthrough you did, are there any web browsers based ones? There are various Arun web based softwares, various ones. I just shown you 4 or 5, the ones that really stand out from the rest of the crowd. But having said that, Arun, one thing is for sure. See, the free ones, the freebies will not give you everything, right? So you might not have the flexibility that a paid software will give you. But still, having said that, there are very good free softwares. So using ROC will tell you which are the stocks which are outperformers, which are the stocks and sectors which are underperformers. Outperformers you put as a buy possibility, underperformers you put as a sell possibility. That's the only information that comes out from our analysis that we've done. Yes, Fasil, you can work on other indices also. Let's say you are a global trader, you trade the globe. So what you can do is you can take the Indian markets, the Singapore markets, the Malaysian markets, and in this case, what should be your underlying base? So you can take the underlying base as something like your Morgan Stanley Composite Index, emerging markets. You have to take the base, the denominator has to be a wide base. So let's say you take the emerging markets index. On top, you put all your emerging markets. I hope you understand what I'm trying to say. Right? You can definitely do that. So Mandir is asking, please give me a link where to subscribe. Mandir, I think you're asking about the YouTube channel. Go to elearnmarkets.com in the YouTube channel and please hit the subscribe. Avinav, no need of volumes here. This is a complete price play. So in this RSC study, there is no scope or requirement to include volumes. Can we do that? Yes, we can do that. That will make things a little more complicated. Using ROC, can you suggest where to enter and what point to exit? Okay. Now, the ROC, the RSC study that we did right now, it does not tell you where to enter and where to exit, or which price to enter or which price to exit. What it tells you is these are the sectors which are strong. Within the sectors, these are the stocks which are strong. That's it. Now within those stocks, when you get a signal to buy, then you buy or not buy. Now where will this signal come from? That's trading strategies altogether. That's a different ball game altogether, right? If you have seen, I don't know if you've seen a year-old webinar that I took on the art and science of trading. I think I did share a couple of strategies there. And if I have some erstwhile AST traders here in this webinar, then you would know exactly what I'm talking about. The RSC is a filter. It's a base that tells you, boss, this is the sector to go long on, and this is the sector to go short on. Now, within that sector, in any specific stocks, when I get a buy trigger, then I pull and I go long. Now, from where will I get a buy trigger? That's the trading strategy, is completely different ball game, right? Trading, what should of ideal risk we should take? Monesh, very good question. Money management, risk management is a very integral part. And that's why I think I've kept one full day in this course for money management and risk management. There can be a big answer to your small question, but if I keep my answer small, then I would say that try not to risk more than 1% of your capital per trade. If your capital is 1 lakh, do not risk more than 1,000 in a trade. Right? Mandir, where have you learned this? By experience or so? Mandir, it's a mix of everything. It's been experience, it's been a lot of reading, understanding. So yes, kind of accumulated all that has gone through over the last 12 years. All right, I'll share the link of your earlier webinars as well, of the webinars that I've taken. Perfect. I hope this webinar was of some usefulness to you. Any doubts, you can drop in a question or call our team members. They'll be very happy to clear out all your doubts, right? And in any case, if ever you need to talk to me, or you can personally drop me an email. You can drop me an email at abhijit@trendacademy.com, and I'll try and make sure that I take care of all your questions. I'll just put in my email ID here. Right? Thanks, guys. You have a good weekend. Thanks for joining in. All right, Arun, looking forward. I'm sure. Looking forward to see you in our AC session starting next Saturday. Thanks, Arun. Thanks for joining in. Bye, guys. Take care. Have a good weekend. Bye.